All right, what up, fellas? Well, last week we talked about, and look, if you haven't watched last week's pod, go watch it because this is just a continuation of that one. Last week we talked about what levels matter and why they matter. We talked about time frames. What time frames should you be trading? What's important for swing traders? What's important for scalpers? What kind of trader are you? And then we talked about context, building context around days of the week, different sessions, what Asia does, what New York does, what London does. We're continuing with this theme here. So Eddie, Nick, Brian, we are basically giving away the blueprint here. We're giving it, we're not gatekeeping anything here, right? We're giving it all away. Simple cheat sheets, simple things to follow. They are simple things to follow. The harder part is actually following them, right? Like that's the part that people mess up. Is the blueprint's not that hard. It's all the psychological stuff around following them that makes it hard. So today we're going to be talking about the 3 types of trades. There's only 3. Like everything is a deviation of these 3. So there's the sweep, the break, or the bounce. So step 1 in being a trader is figuring out your levels, figuring out where you want to enter. That's step 1, right? Step 2 is how are you going to trade it, right? When price gets to your level, it's going to do one of 3 things. It's going to sweep it, it's going to break it, or it's going to bounce off of that support or resistance or fib golden pocket or moving average, whatever you're looking at. So that's what we're going to be talking about today. There's 3 options. I mean, do you guys agree with that, Eddie? Right? I mean, what else is there?
No, that's pretty much it. Just deviations, how you want to, whatever you want to call it, I guess, whatever name you want to give it, it's all the same.
Yeah. Brian, what do you think? I mean, there's little deviations of that, and there's little nuances for like entry triggers. Like if we sweep, maybe you'll look for like a 1 minute break a structure up, right? Or something like that. But this is the basics, the core idea. Would you agree?
Absolutely. Yeah. I mean,
Yeah.
you could SFP the SFP, but at the end of the day, it's either going to bounce, sweep, or break.
Yeah. Dunki?
Yeah, it's every level. It's just finding the context that fits the best for it.
100%. So I am something of a sweep trader. Like that's what I like. So we're going to talk about that first. We are also going to talk about breaks and bounces, right? We're going to talk about those as well. So let's just talk about the core idea around breaks. So this is trading traps. This is looking for trap traders. So price almost always hunt stops before it moves. So if we are trading traps, if we're trading liquidity grabs, right? So what's a sweep? There's lots of names for it. Liquidity grab, trap traders, SFP. Are there any other names I'm forgetting?
I don't know. There's probably like 40 different ICT variations of that don't make any sense. But
dude, I was watching someone last night. This guy, TGR Trades. Have you seen him on TikTok? Yeah. He was calling it SMT divergence. I don't know what that is. Eddie, do you know what that is?
No, I have no idea.
I think that's an ICT term. Right?
SMT is a bearish divergence.
Okay, well, whatever.
Literally all it is. It takes a high with lower volume.
Yeah.
Or it takes a low with higher volume.
Yeah, so I don't care what you call it. What I do care is what's actually happening, right?
Yeah.
So your entry, if you're a sweep trader, is when price reclaims a level, right? So price peaks above all the levels we talked about in the last podcast, right? Swing highs, swing lows, session liquidity, weekly highs, weekly lows, daily highs, daily lows. Your entry signal from a price standpoint is price going above it, trapping those breakout traders, taking those stop losses out, price reclaims the level. That's the entry signal. That's the price action signal that we are looking for. Everyone agree? From a price standpoint, that's the action that you want to see happen. Perfect. So here's the mindset for trading the sweep. Where they're trapped, I attack. When you see trap traders, when you see breakout traders pile into price as it peeks its head above your key level, swing high, low, whatever, and reclaim it, those are now trap traders. Everyone who long that break is now trapped because the position has fell below it. It has reclaimed the level. So step 1, Brian, is to identify the bait. Identify, you know what I mean by that, Brian? identify the trap, right? Where is the trap? What areas are you identifying for looking for bait, for looking for that trap?
Yeah.
Let me ask it again. What levels are you looking for? Where's the bait? If step one is to identify the bait, where is it?
Where's the bait on that scenario? I'd say
On any scenario, like you're looking for trap traders. Where are trap traders?
Simple answer.
Usually trap traders are above the highs and lows.
Yeah. How about VWAP?
VWAP. Typically, I would assume that I wouldn't look for trap traders on the VWAP. VWAP to me is like a zone of high liquidity where you can get into a position without much slippage or something like that.
So you've never seen a VWAP fake out and a reclaim?
Oh, yeah. Yeah.
How about session liquidity or just a level that anyone sees, right? Like some trend line that everyone's, we'll sometimes get into these scenarios where we have like from the election. You remember the election dump? I don't remember when it ended, but there was a big trend line all the way down, right? For like 30 days, 45 days, whatever it was on Bitcoin in this case. Just some trend line that everyone sees. And we actually SFP'd that trend line. And like Brian said, stops live just above or below those lows, or highs or lows, I should say. That's your target for entry. That's your liquidity pool. And I'm just going to share my screen real quick and just kind of show you what this looks like. Boom, share my screen. So like I said, like we went through this last week, but I'm marking out the highs, the lows of the weekly candles. I'm marking out the highs and lows of the daily candles. I am looking for price to peek its head up, close back in, because that's where liquidity lives, above and below those lows. Everything underneath the weekly is just reacting to the weekly. Everything underneath the daily is just reacting to the daily. Everything underneath the 1 hour, and so on and so forth, all the way up and all the way down. So stops live just above and below those. So step two, right? Step one was just, you got to identify the levels, right? What are the levels? We've talked about that. Step two is you just wait. This is why I love sweep plays. This is why I love trading SFPs and only SFPs. And I used to be different. I used to trade breaks and bounces, and I still occasionally do, just not as much. It keeps the guesswork out of it. I'm only waiting for that reaction. So the question is, right? Well, it looks like a lot of levels on your screen. Well, it's not. It's a couple above. It's a few above, a few below. So what level matters, right? Whatever one that reaction happens off of. Because they're higher time frame levels, right? They're dailies, they're weeklies, they're giant weekly diagonals like this. All I'm waiting for is price to peek its head above and reclaim it, or peek its head below and reclaim it. Now, that is my entry signal from a price action standpoint. Does that mean I just blindly enter? No, right? Is every wick above or below an SFP? No, but this is what I'm looking for from a price standpoint. So I'm on my daily or weekly levels. I want to see us dip below, reclaim it. So whatever one that happens at is my entry signal from a price standpoint. You guys with me?
Yep.
You agree? Disagree?
Yeah, I feel like you're teaching me.
That's it. That's what I'm looking for. It doesn't like, it's not just a bunch of lines on my chart. These lines mean something. It's weekly and daily levels. And then we can get into like session liquidity and stuff like that. But these higher time frame levels are what I'm looking for. That's it. So I'm waiting. I don't care if price doesn't do what I want. So I'm waiting for the sweep. If price doesn't sweep and it breaks up and it runs up $1 billion, I don't care. Because I've been doing this long enough to know that, guess what? That $1 billion pump is going to hit one of my levels and sweep it. So I wait for that. It takes the guesswork out of it. It forces me to wait. It forces me to not make stupid moves and take errors. So I'm just waiting for the sweep. That's it. I got my levels marked out. I'm looking for that sharp move through a level. Big old wick, right? Breakout traders chasing, reclaim that level. That's it. And then on that reclaim is step three. On that reclaim is where you enter. So I'm going to go ahead and share this. Right? Step one was identify. Step two is you just wait. Step three is reclaim. That's our moment. When price snaps inside the previous range or falls back below VWAP or falls back below your swing high or swing low or your daily level, that's your moment. This is the SFP or liquidity traders moment, the person who's waiting for the sweep.
So
this is where you act. Go ahead.
Would it be fair to say that the reclaim could also be your entry trigger?
Yes.
That's where you pull the trigger.
Yes.
Okay.
Yes. That's where I fire my shot. I mean, I said it I say it jokingly, but I actually mean it. The other day I said, like, I see SFP, I trade SFP.
I think that's been repeated like 100 times since you said that.
Like, that's just the way it is. If I see an SFP, I'm trading the SFP because I know statistically, way more often than not, that SFP is going to go. It's going to go. If we tap into liquidity and trap those traders, we are going to go. How much do we go for this and that? We'll talk about targets and stuff. Maybe not today, but for the next session. But I just know from doing this so often, we tap into liquidity, we trap traders, we're going to go the other direction, the opposite side liquidity. So yeah. And look, that fast reclaim, when that happens, this usually happens quick. And it tells you breakout traders are trapped and they're about to unwind. And then there's confirmation. Like, what does confirmation look like? Well, what did I say? SMT divergence, right? Whatever the hell that is, bearish divergences. If I see us take a high and there's a bearish divergence, which means your price is making a higher high, but your indicator is making a lower high, what are you doing, right? Smash that long or short button. It's the same thing in reverse. If we're making a lower low, price breaks your low or your level, and there's a bullish divergence there, what are we even talking about? Smash that long button. You have trap traders, you have a reclaim of the level, you have a bullish divergence on volume. What are we even talking about? Smash the hell out of that long button. Now, I think we can discuss this next one, which is, I say you don't need to wait for a candle close. I think that might depend on the time frame, but I think that if you're waiting for candle closes on a sweep, I think you're too late. I think you're late to the party. I mean, if you're waiting for a 15-minute candle close on a liquidity sweep, a session high, say London or Asia, and you're waiting for a 15-minute candle to close, you missed the move. Not only did you miss the move, maybe you didn't miss the full move, but your entry is now going to suck because that could have moved hundreds, some cases thousands of dollars if we're trading Bitcoin away from your price.
I mean, that kind of comes into where we talked about on the last couple was like you zoom in, like you shouldn't be taking it on the 15. Like you see it coming in on the hour, you see it coming in on the weekly or the daily, and then you crop in to take the play. I mean, 5 minute, 10 minute, maybe 15 minutes.
Yeah, so I enter on the 15. I do not wait for a candle close. I see SFP, I take SFP on the 15-minute chart. Gotcha. I'm not waiting for a close. I'm just not. Now, Brian, higher time frame stuff, right? You're a swing trader. You're all-time high short.
Yeah.
What did you wait for? What was your, like, when were you like, okay, I'm going to smash the short button?
So, and I'm glad you said that about time frame specific, because like a swing failure of an all-time high, right? I've got just a simple line across the all-time high. If I dip below that with a nice wick, then the thing about it is if I act fast and I have some kind of confirmation, then my risk is very small, but that ups my chances less because I don't have that confirmation. So swing failure of an all-time high, literally I never wait for candle closes either, because I'm usually looking at something like order flow. So I'm just looking in that wick. And if I can see some kind of reaction, right? Like you said, I'm waiting for somebody to get punished visibly. And then when I see them and I can feel them trapped, I see open interest went up and there was a bunch of positive delta, and then price dips below that, I know all those positions are underwater immediately.
Yep.
So when those positions are underwater, if there's a lot of them, then I can safely assume that the market is going to punish them. So I can get in right away. But I don't have to rush in, because if it's a swing failure of an all-time high, I know that the punishment is going to be a long way to the other side of the range. So I can wait for a retest but yeah.
Yeah, and I just want to be clear. I'm not telling anyone what to do. I'm not saying you can't wait for a 1 minute or 5 minute break of structure. I'm not saying that. Like, at the end of the day, you do you. But I did want to separate timeframes, right? Like, there's a difference between sweeping a big old, like, significant daily swing, and there's a difference between Like for example, the VWAP reversion plays that we take in the morning, right? Like when we sweep London liquidity and we're reverting back to VWAP, you cannot wait for a 15-minute candle to close. You can't. You're going to miss the move. The move happens in 5 minutes, right? Most of my trades on, my average time in trade is very low, right? Because I'm trading the move of the day. I'm not holding trades for days. But like Brian said, if you are trading higher time frame swing trades, right, then maybe it's okay to wait for like a 5 or a 15 or a structure shift or something like that after the sweep happens. But if you're just day trading the move of the day, you can't wait, man. If you do, you're late. Not only are you late, but your risk to reward is going to suck.
Yeah.
Right? You might be turning a 3-to-1 trade into now a 1-to-1 trade where you're just going to break even on it minus fees.
I mean, it could literally be the difference from a 20-to-1 trade to a 3-to-1 trade.
Yeah. 100%. Cool. So back to confirmation, right? Like this might look different to different people. So when I mention like CVD or OBV or RSI or MACD, those can just be placeholders for whatever you use, right? If you don't use any of those and you use money flow index or you use this or that, just replace it, right? But we're looking for ideally divergences. We want to see divergences on our indicators. They don't have to be there for me to take an SFP because I just want to see trap traders. I mean, how many times, Eddie, do we see price wick up above a level, close back in, and volume look like it confirmed that move up?
You're asking me? It happens. Not a lot though. A lot of times volume is a giveaway.
Yep. So it does happen. There are times where we'll pump up above a level. Volume looks like it's taking off. And really, what is that volume? Well, when we break a level and volume pops, who is that volume? Right? Breakout traders trading the break. Like, I want to see that. I want to see volume pop on a level break when I'm looking for an SFP trade. And then I want to see volume stop, all that absorbed, come back down. And now all those breakout traders are trapped. So I think if we were talking like A+ trades, yeah, divergence. We want to see a divergence there. Does it have to be there? No, because we just need to trap the traders. So if volume pops and there's no divergence and we still trap the traders, Brian, are you still taking the trade?
If traders are, yeah, I'm taking the trade if there's trap traders.
Yeah, regardless of what your volume indicators say. What's what I'm saying.
Yeah, if we trap traders, I'm going in for the punishment.
No, because all that means is all those traders who entered on that volume spike are now trapped, right? And I think there's probably some nuance there. Making sure, for example, it's not just a back test, right? So making sure we actually reclaim that level. But a fast reclaim tells you breakout traders are trapped and they're about to unwind.
And it's important to understand why, like what the trap does. It fuels liquidity upside. So these things usually happen at FOMO moments in the market. So if you're coming into an area that looks like, hey, look, if it loses this or it breaks this, it's going way down or it's going way up. Those are the areas where the most trapped liquidities are. The very final structure on the daily, the very final structure on the weekly chart. And when you get to those areas and you go below and close above, you trapped everybody who thought that was the play for the next leg down in the market or the next leg up in the market. And it punishes them quickly.
I'm going to add on to that, actually. I kind of find it funny if you're watching the charts enough, you notice that it's always at the end of the move, whether it's to the upside or to the downside, that price action tends to move the quickest.
Yep.
And if you're able to identify that, that's usually when the most volume is coming in because you got the traders getting trapped, like you said. And it's pretty obvious, like you're blasting through support or resistance too quickly. It's just like, gotta wait for a second, see what's going on. Because that's likely a trap. That's always my mind, at least.
And it's areas of double liquidity. It's coming down fast in this level, and people are if it's coming down fast to this level, people are closing their longs because they're taking profit or cutting trades, and then people are fueling to the dump because it's moving fast and they're shorting it as it goes. And then when it whips the other way, it just squeezes out both of those guys again who took those plays.
And Brian, what happened yesterday? You remember when Bobby asked, what do you mean by longs are coming in? Do you remember that conversation that you had? I forget. What did he ask? Like, what do you mean by longs are entering or something?
Yeah, that's exactly what he asked.
Yeah, that's exactly what he asked. And then you broke it down for him, right? You literally said, here's what's going to happen, right? And then it happened, right? So it happened where? At support. What were people doing at support?
Well, what I commented was, a lot of longs coming in. We're going to crash. And he said, what does that mean? And so all that it was I was looking at the footprint and I saw open interest going way up. And the delta, the difference between buyers and sellers, was going way up on the sellers. And so I was thinking, and what I explained to him was, if open interest is going up and everybody's buying, but the price isn't going up, then we're going down because nothing is happening. So some unseen force is absorbing all that. And the highest probability is that we're going to go down. So it's, I guess, the difference between trap traders and absorbed traders, right? And then it immediately just comes down and traps them. So I guess you could see the trap before it's happening sometimes, right?
Yeah.
Through absorption.
100%. Yeah. So I think it's...
sorry. I was just going to say, when he called that, he called an 8% move in Bitcoin yesterday.
Yeah. So I think it's important. Well, first of all, does this work with any asset? Does this work with gold? Does this work with the ES? Does this work with the NQ? Does this work with oil?
With the exception of the delta stuff we were talking about, yes.
Well,
I mean, you can't see active openings and close.
But
data's not there for us. But everything else is basically the same. And the extra stuff is nice, but you don't need it to be a successful trader.
Right. So there is delta, though. There is delta.
Yeah, there's volume delta.
Yeah, so you can see
footprint.
There's footprint.
You can see footprint?
Yeah, you can see footprint.
Oh.
Yep. So you can see it on gold. You can see it on NQ. You can see it on any futures ticker. So you couldn't see it on SPX. Gotcha. But ES, NQ, GC1.
Maybe I learned something there.
You can see it. So my point is, like, us four, Eddie, I know, is going into gold lately, are mostly Bitcoin traders, right? So when you hear us mention Bitcoin, just insert whatever the hell you trade into that, and it's the same, right?
Yep.
Yeah.
Because
if
people
you're
are
trading futures markets, right? We need to see trap traders and utilizing delta candles to see where people entered. We need to trap them. It's important, I think, to not jump the gun. The trap traders may be a little, like, I don't know if you guys have ever seen this. I have seen this, where the trap traders, it's like they didn't fall for the bait of the wick above. They actually front ran the wick above. So I've seen us blow through a level, a few $100, right, on Bitcoin. On NQ and ES, it's usually about $100 for SFPs. I think gold's about the same, but I've seen us blow through a level and no one really bit on the bait, but they did slightly below it. So there's been times where I have said to myself, okay, I see the SFP, I see the reclaim, but I don't see a whole lot of offside traders. But just a couple ticks below, I see heavy offside traders where I might not take the reclaim, but if we come underneath them just a few ticks lower, then I see trap
it's
traders.
Like it shifts the POC back below those guys.
Yeah.
On just literally the candle wick.
Yep. So
yeah, that's pretty visible in the footprint.
Yep. So just so people understand, I know some people might be like, what the hell is he talking about?
What the fuck are we talking about? Hey, hop in Discord. We'll teach you.
Yeah, we will. 100%. So let's just pretend that this is just for pretend purposes, right? This was the level we were watching on ES right here. This is S&P 500 futures, right? We wick up, we reclaim the level, but I don't like here. This is a bad example because there's obviously this never happened, but let's just pretend it was a pretty even delta. There wasn't like a whole bunch of longs offsetting the shorts, but underneath that level was this 970 right here. I'm going to wait till we trap them as opposed to shorting the break back in. Is that clear?
You just want to, for the people trying to understand it, those people long the breakout. What you want to do is trap the people who long the breakout thinking the breakout's going to continue. And when price action closes under them, then they're trapped.
And
it didn't
why?
Close.
Yes. And why is it important to get confirmation of trap traders? What happens when traders are trapped? What is the process I don't know if you're going to get what I'm asking, so I'm just going to tell you.
I get it. They panic.
Go ahead. What?
Yeah, they just don't know. They got to make decisions quickly, and if they make the wrong decision, it can fuel the move one way or the other.
That's what I'm after. So they're fueling the move. So everyone who went long here has stops here, 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 all the way up, right? Or all the way down, I should say, as price went up. So when we hit those, what happens to their longs, right?
They get underwater. But even the fuel more, some of those guys are adding to their positions at those levels and then trapping themselves heavier. Like this is the moment where it separates real traders from fake traders. Either the breakout is real, where it breaks out, either it bounces, back tests and bounces, or it fails. And those are the three options you get right here. Identifying what happens here is the important part of being a successful trader at the end of the day. Just knowing which way it's going to go when these things happen.
And when you go long and your stop loss gets hit, what does that order now become?
The opposite.
Yep. It's a short. Fueling the move down, right?
Yes.
And that's all that is. It's just liquidity getting soaked up. Everyone freaking out. Everyone's stop losses being hit. Everyone being wrong. And the whales absorbed it all up here, spun it around, and dumped it.
Yeah.
I think for me, that was a big aha moment when I realized that it's the opposite move, and then I could see, oh, okay, I get it. That's how the bigger trader builds a big position. Is
he takes it all twice.
They trap people, and then if they, like, let's say a long, right? Price comes up, right? They're trapped. They have to sell their way out of it, and they're selling into the hands of the other position that wants to absorb everything, right? And but yeah, your move getting stopped out is going to fuel the move.
Yeah.
And then that's when I realized two things: to have patience, because that's usually why we come for a retest, right? Because the momentum's up. You see that big move suddenly to the downside because all those stops are getting hit, and then usually you get that little higher, lower high, and then continue on to the punishment.
It's where market structure comes into play. Like if you have a breakout from SFPing, like if you come down and you SFP a level, it shifts, it breaks out again, and then there's a back test of that, that makes the difference besides coming up into daily resistance and then it breaks over a daily and comes back in. It's all about market structure to help you determine which way that goes when it breaks. If it holds or if I think the naked trading starting point is always good with those things.
And I think maybe we should even just take a quick step back to explain to people who don't know, because I think we're assuming people know this, but this is actually engineered by the powers that be in the markets, right?
Yep.
This is a move that is literally engineered. It's fear, it's greed. They're tricking traders. It's literally a trap. That's what we call it, the trap play.
Yep.
They're literally wicking below or above a significant level to get people off sides, to then wick them out and take stop losses in order to do what? Enter. Because whales, if I'm Jane Street or I'm some big hedge fund, and I need to enter $100 million order, I can't just enter a $100 million order. I need liquidity. Yep. I need your orders. Now, it sounds malicious, right? It sounds like they're hunting stop losses. And it is. It's PvP. Welcome to trading.
Welcome to player versus player trading. It's all it is at the end of the day.
Yep. So this is literally, they engineer these moves to where this is the ES, right? This was a London low here from Tuesday night. Sorry, this was Tuesday at 3:00 in the morning, and this was last night. So we dipped below it.
We can't see the screen.
Up. Huh?
We can't see the screen.
Oh, well.
While he's fixing that, these moves always come with liquidity grabs from both sides. It's the FOMO if you're breaking out like this here, it's the FOMO bulls hopping into the larger structure break, and the bears shorting the larger structure break as resistance, and it gets both those players off sides, and that's what determines which way the play goes. Whoever's got the bigger hand.
Yeah. So this was yesterday's low. Swept it, reclaimed, off to the races, right? So what do? They trick people into thinking we're going lower, but they also, anyone who went long here and has stop losses below is taken out. This is creating liquidity. People are getting wrecked here.
Yep.
So
short buyers are getting squeezed out. Long buyers are getting squeezed out.
so because there's money here, whales, big players can then enter, right?
Yeah, I mean,
They're just freeing
you
up
can see the
liquidity.
deviation there too, right? Just dip below the line, come back up, back test the line, continue.
Yep. Never came back for it. I mean, now, at least now, right?
Yeah.
So I just wanted to kind of explain that to people. So cool. So far we have identifying the bait, prior higher lows, stops live just above those higher lows. That's your liquidity pool. We talked about waiting for the sweep, sharp move through the level, reclaiming it. We talked about reclaiming it being your moment. That's your entry signal. That's where you pull the trigger. And we talked about confirmation. And I think what we'll do after we get through these, it might take us one or two more podcasts to do. We will then go into order flow. I don't want to spend a whole lot of time here talking about delta, candles, and CBD. All I'm going to say is you're looking for trap longs or shorts, ideally divergences, momentum, order flow shows absorption or aggressive defense at the extremes. I think we could spend 6 podcasts talking about order flow, right? So let's just not now. Stay tuned for those.
Yep.
I think step 5 is once you see all those things, right? Once you see the ideally the divergences, I'm going to do divergences or trap traders. Once you see that, once you see the reclaim, you execute the trap. So when you're shorting, we sweep the high, instant reclaim, you enter short, right? What's a long? You sweep the low, instant reclaim, you long. Where does your stop loss go, Eddie, on an SFP play?
Under the wick.
Below the wick or above the wick, right? If you're long or short.
Just generally.
And then we are going to talk about more specific targets, but I'm going to give a spoiler alert to targets. If you are a trap trader, an SFP, a liquidity trader, and you grab an SFP, what's your target, guys? Anybody?
The other end of the liquidity.
Other end of the liquidity, what might that be if you are intraday trading?
Just the previous session high
VWAP.
or low.
It could be VWAP, right?
VWAP. Gotcha.
It could be VWAP or the opposite side of the range or a swing high or something. We'll get more into specifics because I think it depends on there's a difference between shorting the all-time high or not even, I keep seeing all-time high, some big swing high on the daily time frame and taking a 15-minute intraday trade. There's a difference there. We'll talk more about that. So again, just to quickly talk about the 4 pillars, this is confirmation framework across any trading style, any trading strategy, any asset. What are they? It's price, volume, momentum, and time. So price, what's the entry trigger? It's the sweep and the reclaim. We take out a daily high or a session high, London or Asia, and we reclaim it. That proves that the breakout failed. Number 2 is volume. So sometimes you spike into the sweep where it looks like volume's confirming that move, but it fades after. That reveals a potential loss of strength. It shows exhaustion. And then if you use delta candles, which I said we'll get into, it shows trap traders. That's what we're looking for. So volume can be divergences. It can be a spike into sweep and a fade after, or it can be just looking for trap traders. I think all of those in the framework of an SFP is fine, right? I don't need there to be a divergence. I just need there to be trap traders. But if there is a divergence and no trap traders, I'm not taking the trade. Does that make sense? Okay.
Yeah.
For me, for this type of trade, right? Now, if we're talking support and resistance trading and trading a bounce, that's different. We'll get into that. And then momentum, that could be like RSI or MACD or market site or whatever. It could also just be price. It doesn't necessarily have to be an indicator. Are we weak or slowing pushing into the level? It could reveal loss of strength, right? And then my favorite is just time. So it's price, volume, momentum, and time. Are you trading when people are trading, right? Active New York session, actives Asia to London, New York to London. It ensures there's real liquidity and follow through. Are there times when there's real moves and it's not during one of those sessions? Yes. But like I said, generally speaking, you want to trade when people are trading, right? Asia into London, London into New York. Otherwise, you might not get moves like this. It might just be like Asia arranged. Like you can trade Asia open. It just might not be SFPs. It might, you're in a range or you're oscillating around VWAP or something. Do SFPs happen during Asia? Sure. I'm not saying
To
they
be
don't.
fair, the one today happened in Asia.
Yeah. Look, we're not trading the exceptions.
I think the difference is you trade mostly, right, where the traders or where people trade.
Yes.
The high volume sessions. But I think when larger moves are in motion, that's when you find the exceptions to that rule.
Yes. Can you trade the exceptions? Yep. Now, perfect trap conditions. I'm going to share this. Let's just talk about like the perfect condition for a trap. So obvious liquidity level that everyone sees. So that's why we talked about what we talked about. Everyone's watching weekly highs, weekly lows, daily highs, daily closes, because those also align with session liquidity. Big swing highs, daily, weekly, hourly. Just where's everyone's eyes and everyone's focus going to be? It's just the obvious liquidity level that everybody sees. And then we're looking for fast expansion into the sweep on strong vol. You want to see a volume spike. Why, Brian? Why do you want to see volume spike on a break? What does that tell you? When you see a price pushing above a level and volume picking up, what does that tell you?
Everyone's piling in.
Everyone's piling in. Yep. But then you also want to see, for this specific setup, you want to see instant rejection, right? You want to see us. Go ahead.
I also, also another thing I'm looking for is, people come piling in and thinking this is the break. But then there's also the situation where a bunch of stops are getting hit.
Mm-hmm.
So if I see a big volume spike, but I see open interest just drop, then I know that everyone's positions just got taken. And so that could also be a scenario where I'm getting in.
And open interest, just again, so everyone's aware, is what, Brian?
Open interest is positions opening, right? It's
just
in
how many
either
positions
direction.
are in the market. Yep.
Yeah.
When it
It's
goes
total
up,
positions
opening. Open interest is the same for futures contracts on ES and NQ as it is for gold, as it is for Bitcoin.
I think of open interest as commitment of a move. Like if I see price going up and volumes going up, if open interest is going up as well, then I'm thinking to myself, there's even more commitment in that move, right? If I see price going up, volume going up, and open interest going down, I'm thinking that could be aided by positions exiting, and that is aiding that move. So I like to introduce open interest in. It can be complex, but
yeah. And, excuse me. I'll have to cut that out. Eddie, like you said, if price, so again, in the context of a trap trade, if we are going above a previous swing high and OBV or CVD or MACD or RSI or whatever is disagreeing with price, what is that?
It's divergence.
Yeah. And that's just a clue. It's a potential. You ever played the board game Clue, right? It's just a potential clue to the trap being a trap. And then the perfect trap condition, it happens when people are trading. I think if you can hit these 5 little perfect trap condition tenets, you will be a successful trader. Again, it's easy to know what to do. It's harder to do what you need to do because price is
Just
always trying to
patience.
trick you into doing something else, right? Hit that long, hit that short button. But if you can just wait,
controlling FOMO.
yeah, if you can just wait for these perfect, and trust me, these perfect trap conditions happen, almost every single day.
Yeah, 3 or 4 times a week for more than $5,000 or $6,000 at this point.
Yeah, it's yeah.
Mm.
The shorts have been nice lately.
Yeah, and at some point the longs will get nice again, and then the shorts will get nice again.
Yep.
If we just take it both ways.
So again, in the context of the trap trade play, here are the no trade conditions. Remember, you're a liquidity trader. So if there's no sweep of liquidity, guess what you don't do? What do you not do, Eddie? If you're a liquidity trader and we don't sweep liquidity,
You don't take the trade.
you don't take the trade. It's that simple. You just don't trade. And what if there's no sweep of liquidity that day?
You just don't trade that day.
100%.
That's your style. You stick to it.
Yep. If there's not I think even you said this before, Eddie, which is fast expansion I forget how you said it, but like when we get to a level, you're looking for that like big kind of push up, like a fast expansion into that level. Didn't you say something like that?
Yeah, you want that quick acceleration of price into a support or resistance.
Yep. Yep. I was reading the last one, but yes. So no sweeps of liquidity. How about if just the breakout holds? Because I think there is a difference, Nick, right, between jumping the gun or thinking every peak above a high or low is a SFP, but also like what usually happens when it's a real breakout?
It just keeps going.
Well, you have a back test, right?
Yeah.
So I think a lot of people will think, oh my God, SFP. It comes back down, just barely touches that trend line. They hit short, and then it was just a back
boom.
test.
Yeah.
It just goes boom. Right?
It's here's that psychological pinpoint. So pretend you shorted the SFP going up. It comes back down to your in profit just slightly again, psychologically making you either hold the position longer or set the stop loss above the new high that just put in, and you either right or wrong at that point. If it comes back up and breaks that high, that's where you have to cut every single time.
Mm-hmm. If it's just like crappy price action, and what do I mean by that? Like just no volume, low volatility chop. For me, those are just no trade conditions. Like I'm just not interested, right? Like if it's
chop, that's why you get chopped.
Yeah. Or if we're just like hugging VWAP, yeah, sure, maybe a big move is coming and we sweep the range and then go. But that's it. If there's no reclaim, if there's no rejection wick, or if it's just dead hours, again, are there exceptions to this? Yes. And then
watch price action on a weekend roll between 50 points all weekend.
Yeah. Like just go touch grass on the weekends, right? Go ground yourself to the earth, right? Checklist, key liquidity zone identified. Look, a swing, a VWAP, a trend line, right? I'm not talking a 5-minute swing unless it's obviously lines up with session liquidity or something. Talking like we've just been talking higher time frame levels. Clear sweep of liquidity occurred, price reclaimed, range, or VWAP, right? I will trade the shit out of a VWAP SFP all day long. We sweep it within the context of the market. We sweep it. Everyone piles in thinking we're reclaiming VWAP and going up, close back in, right? Also, why would we sweep VWAP? Like, if I'm shorting down to VWAP and we go a little bit below VWAP, where's my stop going to be? Above VWAP, right? So stops live there, liquidity lives there. It's a high volume zone. That's why it's or VWAP, right? A swing VWAP trend line. Trap traders visible, OBV, CVD, OY, delta conflict, right? We talked about OY being open interest. Session timing valid, stop set beyond the wick. Ideally, I want people, especially new traders, targeting 3Rs, right? When you become a sniper, when you become good, if you want to take 2R trades, by all means, do you. But till then, 3R plus.
Yep.
And we'll get into that, what that means. The trap doesn't wait for your candle close, and I'm going to put a caveat there depending on time frame, right? You strike when the breakout fails. When price gets back inside fast, that's where money flips sides. That's where the handshake happens. That's where retail traders just got wrecked. Big whales of big traders and hedge funds and trading houses say, thank you for your orders. We're going the other direction. And that's it. Agree or disagree?
Agree.
Yeah.
So I think now I'm going to ask you for a question. We've been going for about 50 minutes here. We only went through the trap trade, right? It might take us just as long or less to go through the breakout and the bounce. I think we make the break trades and the bounce trades for next week. Are you guys cool with that?
Yeah, I'm good with that.
Okay.
Yeah, that works.
So I think we end it there, and I'm going to end with this. Let's just end it with these cheat sheets are all available in Discord. If you want, discord.gg/techledgetrading. Links will be down below. Hop in. Create a ticket in the support channel in Discord. I will give you 30 days free to come and check us out and trade with us live. We trade live every day. New York session. Multiple weekly trainings, right? I run to Brian, Eddie, Dunki's always doing shit. We're in here. So come join us.
So
right?
there's so much going on in Discord that it's probably overwhelming.
Yeah. But look, if you do take us up on that offer, like, don't just be a fly on the wall.
Yep.
You
Your
know,
participation is really what dictates.
Participate. That doesn't mean when we're in there trading New York, you got a million questions. So there is a fine line.
Yeah.
Like, we are actually trading, but just
Yes.
listen, write down your questions, ask your questions when it's quiet, right? And we will do our best to help you out. Anything else? You guys, any parting words?
I think I'm good.
You said it all beautifully.
All right. We'll see you guys next week.
Later, guys.
Later, y'all.